Yeah, share screen. Just gotta make me host. It's gonna be a raw one off the dome. Have you read this one yet? I have not read it. I'm going straight raw off the dome. Cool. Let's go. So all our content is for education, information, entertainment purposes only. It should not be considered as investment advice or recommendation to buy, sell, hold any assets or place any trades. Please do your own research. Our content is intended and should only be used for informational use. It is very important that you do your own analysis before making any investment, which should be based on your own individual circumstances. You should always take independent and professional advice from a professional advisor. I'm not a advisor. Keisha is a professional advisor. No one on this call is a professional advisor. Or independently research and verify all information you may find in our show that you wish to rely upon, whether you wish to make an investment decision or otherwise. That's because all investments come with what, ladies and gentlemen? So you should always do your own what, ladies and gentlemen? So we are not financial advisors, do not intend to be perceived or received as financial advisors. However, we are working in collaboration with several accredited advisors. If you're unable to mitigate your risk, then please contact us immediately so we can refer you to an accredited advisor. So let's get into it. So let me just press the record button on here. Testing, testing, testing. Yeah. Okay, ladies and gentlemen. So what we're going to go through today is the Digital Assets Insight and Market Trends H1 2024 report from the CME Group and our homies at Glassnode. Now, if you don't know anything about Glassnode, they are the probably #1 company when it comes to on-chain analysis. What is on-chain analysis? This is the ability to look into a blockchain and look at the transactions, the data, the movements, the inflows, the sells, and the holding of a digital asset. Now, this we believe is going to change the entire global markets. Once the global markets, the stock markets, that is, all come on chain, then we will have real time on chain reporting of what is happening with companies in real time. So, this is why we think it's important for any investor, any analyst, any researcher to start getting used to Glassnode and on-chain analysis because it will be the future. We said that stocks would come into the crypto market. We said that property will come into the crypto market, and those things have already happened. So guess what's next? On-chain analysis for stocks, on-chain analysis for property. That is the logical next step. So let's just quickly take a quick. We're not going to read through all of this in detail. We're going to skim read a lot of this. We're going to give you the links to read it in your own time. So CME has been at the forefront of institutionalizing the asset class, having launched its Bitcoin derivatives offer as early as 2017. With its expertise and leadership in the market, CME Group is uniquely positioned to provide a comprehensive guide for investors. This report aims to provide investors with a deep, in-depth understanding of the burgeoning digital asset class using sophisticated data by Glassnode. So let's look at Glassnode. So Glassnode is a leading market intelligence provider in the digital asset space, primarily focused on institutions. Now, Glassnode's platform actually delivers unparalleled on-chain analytics and deep insights into Bitcoin and decentralized finance markets. It's actually been around since 2017, so that's quite a while. Now, this report has been put together by the analysts, by four of their analysts, actually. Big shout out to James Check, aka Checkmatey, Alice Con, Alice Con, Eucuria OC, shout out Eucuria OC, and Crypto Bizarre, shout out Crypto Bizarre. And then not to forget the CME Group guys. Make sure you go and follow David Gretzky and Payout Shah on LinkedIn, as we do every time in Blockchain Sensei episodes. Add the people that we've mentioned on LinkedIn, and it will inevitably grow your network. So, cryptocurrency future and options. what is happening here? So available futures and options contracts. We have options and futures contracts on Bitcoin, Bitcoin Euro, ETH Bitcoin ratio, micro Bitcoin Euro futures, ETH Euro futures, micro Ether Euro futures. That is crazy. Now, that is a big mix up, right? So one of the things that we always like to look at is what are the things that the big players are looking at? Because if these big players are analyzing it, just like with Grayscale, then maybe there's some potential in those assets that we don't understand. So these assets that most of these we've covered before. Aave we've definitely covered before. Algorand we've covered before. Avalanche we've covered before. Axie Infinity we've definitely covered before. Bitcoin no brainer. Cardano no brainer. Chainlink we've covered before. Chili's we haven't actually covered Chili's before, so that is one maybe we need to do. Cosmos we've covered before. Curve we've covered before. Decentraland we've covered before. Ethereum, yeah, you definitely showed it. We'll probably need to do an episode on it. Litecoin, Polkadot, Polygon, Solana, Stellar, Synthetics, and Tezos. So these are the assets that they're holding. So you probably want to do your own research. Go back and look at past episodes of Blockchain Sensei where we've covered these things. So, Keish, do you want to take this page first? So let's recap that. Let's recap that for the cut, for the YouTube cut. So let's just quote that. The Bitcoin market cap has actually increased 1.13 trillion since the previous market lows that were established in November 2022. So that's $1.13 trillion that have come into Bitcoin. So if you still have doubts, yeah, cool. And if you're not happy with 370% gain on Bitcoin, then in a 2 year window, I don't know what you're looking for. Yeah, mad. So I'll take this one. In total, the digital asset landscape is now got an aggregate market cap. The entire crypto market space has a market cap of 2.56 trillion, with Bitcoin holding over 1.33, as we said. And the broader altcoin market cap represents around 611 billion. So stablecoins have emerged as a significant pillar, obviously. They make up 145 billion of the space. Um, with sorry, with Tether, otherwise known as USDT, still with its massive dominance at the moment, with 74% of the dominance of the stablecoin market, leaving our good friends at Circle USDC with just 22% of the market dominance. Now, what this does politically is absolutely amazing for the American dollar. So we should expect to see the Americans adopt stablecoins because they've got 145 billion flowing around in US dollars, and being the main on ramp and off ramp for people getting in and out of crypto. So sounds like a good idea to me. Cool. I'll take this one. So Bitcoin has retained its position as the largest digital asset for 16 years and commands over 52.7 of the total industry value. Bitcoin dominance grows during bear markets, and Ethereum is measured as the dominant asset within the altcoin sector. Cool. It's clear. Kish, if you want to take that one. I think that's quite obvious that what happens is first the money goes into Bitcoin because it's a store of wealth and people are just looking to beat inflation and get those gains. Then from there they sell out of Bitcoin because they realize that they can get better gains in ETH. Then what they realize is they can get better gains outside of ETH and get better gains in altcoins like we're seeing right now with Solana and Sui and so on and so forth. And then from there, when the market collapses, when people are cashing, it's collapsing because people are cashing out of the alts into the stables to then go and buy Bitcoin again because you need the stables to go and buy the Bitcoin again. So overall, what people are trying to do is actually accumulate Bitcoin in the long run, but they're using these other assets to get the gains, to then go into stables, to then go and buy more Bitcoin. Cool. Uh, mhm. So Bitcoin has a predetermined supply schedule with the rate of Bitcoin issuance declining by 50% every 210,000 blocks, approximately every 4 years. The total circulating supply is 19.696 million BTC, and issuance rate has recently halved from 6.25 per block to 3.125 per block. Let me get this one for the camera. Get this one. Nice. So, Bitcoin has a predetermined supply schedule, with the rate of coin issuance declining by 50% every 210,000 blocks. That's 210,000 blocks of Bitcoin that has been processed in transactions and adding to the block cycle. Then, guess what happens from there? Oh, I've just screwed that up. So, hang on a minute. With the rate of Bitcoin issuance declining by 50% every 210,000 blocks, that's approximately every 4 years. The total circulating supply is currently 19.696 million. And the issuance rate has recently halved from 6.25 per block to 3.125 per block. So these newly mined coins represent a significant proportion of the revenue stream to Bitcoin miners, which means that because the blocks are halved, the Bitcoin miners are making a little bit less money than before. Apart from the ones that were holding for a very, very long time since 2010, they can now sell at a very, very higher rate than when they first got it in 2010. Cool. So, over to you, Kish. I'm going to do this one for the cut as well. So here's one for the cut. So what's happening at this moment in time is the S&P 500, which is the top 500 stocks in the United States that pretty much represent the American economy, is currently doing daily transaction volumes around $253 billion a day. Gold is doing around $162 billion a day. Visa is doing around 38.8 billion transactions a day, and MasterCard 24.7. Now, guess what Bitcoin's doing? Bitcoin is currently doing 6.5 billion a day in transactions. Now, that means that if Bitcoin's about to come to the goal, who knows? Could it go on to do 20, 40, 60, 80, 100, 200? Well, here's a bit of a clue to give you the icing on the cake. At this moment in time, the total unfiltered on-chain activity is currently totaling up at 46.6 billion a day. Now, guess where most of that's happening? Two major platforms, Binance and Coinbase. Can you buy stocks in Coinbase? Yes. Can you buy the Binance token? Yes. So can you profit from this ever increasing growth of daily transaction volumes from these networks? Yes, you can. Cool. Next one, centralized exchanges represent the principal value venue for investor trading activity for Bitcoin. In aggregate, we see several $billion worth of Bitcoin deposited and withdrawn on-chain transactions every day. Volume exchanges reached a new all-time high in March with over 4.37 billion in Bitcoin deposited across 889,000 deposit transactions. So that means the average deposit size is 48K. Now, straight away, this should show you that this has got nothing to do with retail, because the average person in retail does not have 48K to put on Binance or to just randomly invest in crypto. So these prices, are they created by retail and people getting in on crypto? I don't think so. Space is that in the corner. Oh, it's Dom's. I think she's frozen. Tommy looks so weird. You look like a mega nerd. Look like a mega nerd that's like a mega fan. It's like, I love Bitcoin. Tell me about the Bitcoin. What is this a call about Bitcoin? I want to know what's going on. Let me see. These gentlemen are talking about Bitcoin. Oh, Bitcoin. How much Bitcoin do you have? Sorry. Let me quickly take some questions before you shoot off, Keish. Uh, Alex trying to get in the Zoom room. Alex can't get in the Zoom. Also, oh, apparently we can't hear you on the YouTube. But oh well, we're going to cut this up and put it back out anyway, so it's all good. Do you want to take this last one before you shoot? See you later, broski. Cool. So the difficulty regression model is one approach for estimating the all-sustaining cost of production for a unit of Bitcoin. So this basically shows how difficult it is to mine Bitcoin and what the average price that a miner is getting it for before they're selling, before outside of the market value. So they're probably doing like 100% gains on it at the moment. It's fair to say. So Bitcoin price performance metrics, this is the bit that you are all looking for, right? So since the 2012 cycle, so Bitcoin performance after halving and Bitcoin performance in general. We can see that if you was in Bitcoin since the 2012 cycle, you're making a whopping 8,100%. If you were in Bitcoin since the 2020 cycle, you're making a whopping 650%. And if you was in since the 2016 cycle, you're making around 350%, which is quite interesting. So this is showing the kind of gains that happen after the halvings. So is it safe to say that we're expecting after this halving 100% gain? Yeah, I think that's pretty much safe to say that would happen. In fact, I don't think we're far off that happening or having happened already. So, and what these different epochs are, these are the amount of Bitcoin that was available since that halving. So since the 2012 cycle, you used to get 25 Bitcoin for mining Bitcoin. And then in the next cycle, the 2016 one, it dropped to 12.5. Then in the next cycle, 6.25. And in the next cycle, 3.125. So you can see things are getting lesser and lesser and lesser and lesser. It was definitely something, it was good. It paid to be in early here. Now, the very important one, maximum drawdowns. So this is understanding the maximum drawdown, like how much you should expect this asset to pull back by. So the 2024 uptrend has also experienced relatively shallow drawdowns compared to previous bull markets. The deepest correction since November 2022 has seen prices pull back by 20%. Now, this is where people are going, oh, the market's crashing, it's over. When in reality, we've seen the markets drop 63%. We've seen alts drop 90%, 80%, and recover. So previous cycles have experienced much deeper corrections ranging from 25, minus 35% in the 2016 cycle, and as deep as 50% to 63% in the 2020-21 cycle. So if you cannot stomach these lows, I don't think it's for you. Cool. So realized volatility. So this is getting a little bit more techie here. So realized volatility for Bitcoin has historically been elevated during bull markets and declines during periods of reduced attention and adoption. So that means volatility means the price going like this. So obviously, if there's less people interested, then the less it's doing this. Again, people think that it's retail, but it's quite clearly institutions from some of the stuff that we've displayed. So the uptrend in 2023 has now been in play for over 18 months, and realized volatility is compressed between 40% and 55%. So 40% and 55% swings is what we're getting at the moment, in comparison to 2017, where it was 120 to 150%. So when institutional people say that, oh, no, you can't get into crypto and into Bitcoin, it's too volatile. Well, actually, it's not as volatile as it used to be. And it's coming close to that of FX, if you ask me. Oh, my battery's just died on here. Okay, so Bitcoin on-chain metrics. So the database contained within Bitcoin and other digital asset ledgers is transparent. That allows us to see things such as the amount of people that are holding in profit or the amount of people that are in loss, which you can't do with stocks at the moment. Imagine you could do that. And the realized cap is an important on-chain metric for Bitcoin, as it captures the aggregate value of all coins. So the realized cap is currently at 591 billion. Historically, the spot market cap was traded near or below the realized cap during the late stage bear markets. So here we can see is realized is people that have actually sold and taken that money out. So this is one of the big ones that Glassnode are famous for, and that Kathy Woods absolutely loves, and we love too. which is the MVRV ratio. So this is the market value to realized value. So let's just break down what market value to realized value is. Market value is the current price. Realized value is the price people are actually selling for. So ideally, you want the market price to be higher than the price people are selling for. That means that you've got a good asset and you've got an asset that's currently undervalued in comparison to the market. That means it's a good time to buy. Now, when that switches and the market price is higher than the actual realized price, that's when, again, things are a little bit more complicated now. Now, why they're complicated? Because it means that the price that people are actually selling for is actually higher than the. No, wait, I've got it wrong way around. Let me backtrack on that. So, market price, realized price. So, if the market price is higher than the realized price, so that would be like saying you can buy this iPhone for. This isn't an iPhone, it's a Samsung. I'm lying again. If you can buy this Samsung device for $100, but you're selling it to a friend for $80, then you're selling it lower than the market price, right? Now, the next way around is now the realized price versus the market price being switched. So this is now where the value of this phone is $100. That's the market price, but you're actually selling it at 110. So that means your realized price is higher than the market price. Hopefully that makes a bit more sense for people. So that's when you're in a bit of profitability, is when the MVRV is higher. So that's what we're looking for. So MVRV above 1 indicates that the average investor is holding a large unrealized profit. So that means that the average person is holding Bitcoin and they haven't actually turned it into profit because the price that they bought it for, the market price is now higher than the price they bought it for. So that means that if they sold it, they'd be in profit. Now, a low MVRV means that the average person, if they sold it, would be in loss because that would mean that the price that they've bought it for, the market price is currently lower than the price they bought it for. So yeah, so that's something that we're looking for is MVRV ratio. So again, just because I'm conscious of time, I'm not going to go through all of this, but let's just quickly go on to Ethereum fundamental metrics. So Ethereum is the second largest asset in the asset ecosystem and currently has a supply of 119 million ETH in circulation. Ethereum initially launched as proof of work, as we know, and then switched to proof of stake. Rather than using computational work to become a node, you now just need to hold 32 ETH, and then in return, you get approximately 2.6k ETH a day, which is a massive drop from when people used to get 14.3k ETH a day. So validators take the place of miners in the Ethereum proof of stake, and this is the amount of active validators. So there are currently over 1 million active validators on the Ethereum network. Then we're looking at total staked supply. So a total of 32.2 million ETH is currently locked by validators as staked collateral. The amount of ETH staked has generally increased over time. This currently represents 27% of the circulating ETH supply. More recent technologies such as liquid staking tokens mean that people can use their staked ETH collateral as an asset to get loans against it. Cool. Issuance versus supply band, we won't go into that. Issuance versus supply band in merge, we won't go into that. Price performance after halving, this is something that we're looking for. So 2016 cycle price performance after halving. Again, comparing Ethereum to Bitcoin. Again, a lot of people invest in Bitcoin, but the gains are in ETH. If you invested in 2016 into ETH, your gains would have been 3,400 in comparison to Bitcoin's around 1,500. Now, the 2020 cycle, Ethereum absolutely eclipsed Bitcoin by doing returns of 2,150%. So again, are we expecting these kind of returns? No, We're expecting them to be lesser because the market cap is bigger, but we are expecting these kind of returns to come from alts that are just below it. No names. Okay, so now the maximum drawdown here. So the maximum drawdown for ETH in the different cycles, we saw that the from inception to the 2018 bull, they saw a drawdown of 65%. However, it got even worse. 2018 to 2021 bull saw drawdowns of 67%, and currently maximum drawdowns are 42%. So what you can see here over time is the drawdowns getting lesser and lesser and lesser. Cool. ETH to Bitcoin ratio, we won't go on to there. Annualized volatility, we won't go on that yet. ETH on-chain metrics, realized cap valuation. So again, the MVRV model is just here for you to see, which we've already discussed. This. Cool. So percentage of supply in profit. So by assessing the cost basis of each coin, which you can do with on-chain analysis, the overall Ethereum supply can be grouped into those held in profit and those held in loss. For this, we can define the percentage of total coins held in profit, which is crazy analysis to be able to see the amount of people holding Ethereum in profit, right? So during late stage bear markets, the ultimate floor has historically been established with more than half of the coin supply being held at a loss, signifying a point of maximum financial stress. Conversely, sustained periods where the coin supply is more than 90% in profit tend to characterize late stage bull markets where investors start to take profits and eventually overwhelm the inflowing demand. So this is what we're looking for. We're looking for, when do we get to a peak level of way too many holders are in profit? Because that's when you're very likely to get a decline. So we're looking at these levels here. We can see when there was over 90% of people holding Ethereum in profit, what is likely to happen? Then it's likely to get opposite. So futures, we'll get into that. Trade volume, won't get into that. Yeah, we won't get into those. Options, spot markets, sell side risk ratios. Okay, we'll just wrap up with this conclusion. So this report has provided a comprehensive overview of the digital asset landscape, focusing on key areas that are essential for institutional investors. We examine the fundamentals of Bitcoin and Ethereum, detailing supply dynamics and impacts of major events like Bitcoin's halving and Ethereum's transition to proof of stake. On-chain metrics such as realized cap and MVRV ratio were analyzed to provide the insights into investor behavior and market cycles. The report also highlighted the dynamics of capital flows, illustrating how funds move between Bitcoin, Ethereum, and stablecoins. Understanding these flows is crucial for predicting market trends. Additionally, we explored the growth of the derivatives market, knowing there's a significant role of futures and options in institutional trading. With the insights provided here, investors are positioned to make better data-driven decisions in the digital asset market. And now, so are you as a member of the Blockchain Sensei community. And now, so are you, one of those many people that have watched either live or on to YouTube. So let's take questions for 15 minutes or 5 to 10 minutes before we wrap up. So who have we got before people start shooting off? I believe we've got some new people here in the room as well, so they always get to go first. So Lask, I believe you're first. You don't have to come on camera. I just want to get some feedback on what you got from today's webinar.
Hi. Can you hear me?
Yeah, can hear you loud and clear, buddy.
Yeah. So I've been going to the Cratech events with Ninja. So I'm just trying to get a deeper understanding of these things. I didn't really catch anything until the last 10 minutes, so I don't really have any questions. But
no worries. It's all on YouTube.
Check
back. So, and we're going to send the report in the group as well, so you can read the report in your own time. But
thank you, mate. Thank you very much.
Thank you for supporting. Appreciate it, buddy.
Thank you.
No worries. Then Alex.
Yo.
What's good, homie? What did you take from today?
Just a quick question on the MVRV. Is there access to that for free as such, or is that only does that require CoinGlass thing
Yeah,
to see.
it does require a Glassnode membership. However, there's a way around it, which I'll teach you very shortly. But they might have got rid of it. It's what we were doing. But I'll show you later.
I mean,
We're talking to Glassnode anyway, so if we get our Glassnode partnership, then we'll be doing it on the dojo.
perfect. Another quick question about it. I mean, looking at the report, when obviously the MVRV ratio reaches the same area as and when the Bitcoin price is, could that potentially be a top indicator? Just looking at the photo in the report.
Yeah, they've got this whole like +1 and -1 thing that they do. Well, let me go to MVRV on here.
Because just looking at prior cycle highs on that one that's in the report, when they touch, doesn't look like it'd be a bad shout to maybe take some profits.
Is this a Bitcoin or ETH?
The Bitcoin one.
Not the Bitcoin one. Yeah, so when they touch, yeah, I can see what you mean. So I kind of see the MVRV is very similar to the 1020 cross. That's the way I see it. If you can get the MVRV and the 1020 cross in line, and RSI in line, and Bollinger Band breakouts, that is a clear, like you literally can't get more clearer data to say get out.
Yeah.
So yeah, I think combining on-chain analysis with technical analysis like that is then very difficult to not be profitable. And I think these skills like this of being able to read technical analysis and on-chain analysis and fundamental analysis as we go into a market in a world powered by AI and it becomes more volatile, it's going to be much harder to just buy and hold. And you're going to need to know how to swing trade. And this kind of analysis is going to be crucial. So yeah, good shout.
Perfect. Cheers, Mike.
No worries. Then we have St. Jerome. What's good, homie?
What's good? Just a quick question. So market value, realized value, would I be correct in saying the market value would be the price that you can buy on an exchange, Binance, Coinbase, for example, and then the realized value would be the actual value based on mining operations and hash rates and stuff like that?
Let's get the exact definition from them. So their exact definition is well, they don't give an exact definition. I saw it as the here we go. Here it is. So the realized cap is an important on-chain metric for Bitcoin as it captures aggregate value of all coins priced at the time that they last transacted on-chain. So the realized is the price that the last time it moved, it was sold for. So the average last selling price, not the current market value price, but the average price that someone's willing to sell it for. So it's kind of like looking on StockX. That's the best way I'd put it. I don't know if you use StockX much.
No.
Okay, so StockX, when you look at trainers on there, they give you the price and then they give you like the average price that people are willing to sell it for. And it's very rare that you actually get to buy something on StockX for the price that it's listed for. Same thing with NFTs, right? It's very rare that there's like a floor price and then there's other prices. I think that's the best way of thinking about it.
Yeah.
Cool. And then Dominica, was there any questions? No questions from Dominica. Cool. Right, that is a wrap-see there. And then I've got the dojo with you lot in, I believe, in half an hour. It's in half an hour? Yeah, in 30 minutes. Cool. So I will see everybody in the dojo that's in the dojo. See you later, guys. Bye.